what is Bitcoin? It's not digital currency, it's digital capital. What is the use case of capital? Wealth preservation and growth. Why is Bitcoin digital capital? Well, because it is a crypto network backed by digital power that's capped at 21 million, that's universally embraced as a commodity, not a security, not a proprietary token, that's beyond the control, corruption, or censorship of a government, a corporation, an individual. So it is a crypto monetary network. It went from nothing to 2 billion to 20 billion to 200 billion to 2 trillion. It's been growing more than 60% a year for a decade. What's my forecast? My forecast, it will grow, it'll decelerate from 60% to 20% over 20 years, over 21 years. Why 20%? Because the cost of capital, the S&P is growing 12 to 15%. Bitcoin's going to be about 50% better than the S&P. Why? Why is it going to be 50% higher performing? And why? And by the way, it's going to go from 60 vol, 60 AR to 20 vol, 20 AR. Why will it be more volatile than the S&P index? Why will it be higher performance than the S&P index? Because Bitcoin strips the risk off of all physical real estate. So if you wanted to hold real estate as a long-term store of value, you know what happened in LA, you know what happens with hurricanes, you get fires, floods, you get rent control, you get politics, you get expropriation. What's your real estate in Nigeria going to be worth when the currency goes to zero? So it strips the real estate risk off of tangible property. It strips the currency risk out of securities. Like I give you every single company in Africa, what's it worth when the currencies go to zero? Or you can own anything in Argentina when the currency goes to zero. Your bonds, your securities, all these things collapse because they're all currency derivatives lightly constructed. So Bitcoin doesn't have counterparty risk like a security or a financial instrument. It doesn't have physical risk. And finally, it's literally without counterparty risk to a creditor, a culture, a country. If you're owning Picassos, you have counterparty risk to a culture. If you think you're insulated because you own the Patriots, you have counterparty risk to a different culture. So you don't want to be counterparty to any political entity. You don't want to be counterparty. What iPhone are you on right now? Is it like the 16 or the 7th? Like, what about the iPhone 99? Okay, well, here's the thing. In the year 2100, Bitcoin is going to be 1/21 millionth of all the money in the world. That's never going to obsolesce. In 1,000 years, you're going to want to own 1/21 millionth of all the money in the world. But in 100 years, it's not clear what product or service you buy today you're still going to want. So Bitcoin is like, the whole idea is I have an investment of capital for a long, long time without counterparty risk to anything, any company, any idea. And if you combine that, which makes it higher performing, with this other idea, which is that it is unregulated, you're trading it on 1,500 exchanges, 24/7, 365 everywhere in the world. So on Saturday night, if you need $1 billion of credit, you can get $1 billion from the Bitcoin network if you want to pay the right amount. If you want 100 to 1 levered bet negative, you can actually either you can place $1 billion bet in a minute, you can extract $1 billion of credit. So it is a monetary network that's giving you leverage and liquidity. Like literally it traded like $100 billion in like 48 hours over a weekend or something. It is the most, everybody says, what's it good for? It's the most useful thing in the world if you care about money, because what it's good for is unlimited leverage and unlimited liquidity everywhere at all times for, in theory, 400 million counterparties, right? Anybody can jack into the network and trade peer-to-peer or via these crypto networks. So my view of Bitcoin is it's digital capital. And my forecast is it'll just decelerate from 60% to 20% as it goes from 2 trillion to 200 trillion. When it's 200 trillion, it'll still only be 25, 30% of the equity capital markets. And And the drivers are going to be technology advance, money printing, inflation, and chaos. Now the issue is everybody looks at it and they think, well, the price is going up. What happens if the price stops going up? And the point that I make is the capital is flowing from a more insecure, more disordered state to a more secure, more ordered state. So it's kind of like go to a mountain lake and watching water flow over a waterfall and saying, well, what happens if the water stops flowing downhill? And the point is, the water's flowing downhill because of physics and thermodynamics. It's not accidentally, randomly, speculatively, just happens to be going in that direction. And if I take you and I give you $1 billion and I drop you in Africa, and then I say you have to buy a diversified portfolio of African real estate, bonds, currency, derivatives, and companies somewhere in Africa and hold it 100 years, you're going to have a panic attack. And then I'm going to say, or you can just have Bitcoin and you can put it in Singapore, Monaco, London, Paris, or New York in a couple of minutes, risk-free. Would you like to punch the orange button? And the answer is, of course. As a practical matter, and I've looked everywhere in the world, and I've been everywhere in the world, the number one currency is the dollar. The second best currency is the euro. If you go to Europe, there's a 99-to-1 predilection to convert your euros into dollars. The Europeans don't want to be in Europe, okay? The billionaires don't want to be in France. Everybody in Africa wants their money out. Everybody in Russia wants their money out of Russia. Nobody in China wants to keep their capital in China. No one in South America wants to keep their capital in South America. Everyone is fleeing to the US real estate market, the US securities market, the US currency. And if they can't move their capital there, what's the second best idea? Well, what if I had Bitcoin, which I self-custodied, which was supported by the US capital markets? And so when I say that's my forecast, what I'm saying is capital goes where it's best treated. People are waking up to the idea that they can put their money in cyberspace. Then the next issue is, well, what's the dominant crypto monetary network? And there's 15 million tokens and there's 10,000 crypto whatevers. And when you look at it, what you conclude is 99% of the true capital has been invested in Bitcoin. The second best, I challenge you, find me one public company that's ever invested $250 million in any other crypto network as a store of value.
So why own Strategy as opposed to just owning Bitcoin directly?
Bitcoin is a crypto commodity. And if what you want to do is own raw commodity, like raw land, then you would buy Bitcoin. It gives you the least counterparty risk, the most optionality, the best tax treatment, the most optional counterparties, etc. So if your time frame is very long and you have an uncertain future and you want max optionality, you should definitely own Bitcoin itself and be in a position to self-custody or change the custodian to any custodian in the world at any point in time. My company is a US seasoned issuer. We're one of 400 companies in the world that's a seasoned issuer. And what a seasoned issuer means is we can file a registration statement with the SEC on Monday morning and sell $2 billion worth of securities by Monday close of market without waiting for permission. There's only 400 companies in the world can do that. How many companies in the Bitcoin space can do it? Like two to four. There's 4. We are 10 to 100 times bigger than the other 3. So we're like sitting with almost 50 billion of permanent capital as the seasoned issuer with the largest pool of Bitcoin in the world. And so what our business strategy is, we're securitizing the market. So it's like we're going to borrow money at 0% interest. Like we just issued $5 billion of convertible bonds at 0% interest, and we're going to invest it at 60% return. Right? So we're borrowing at 0, investing at 60, scraping the difference for our shareholders.
What percent is institutionally owned currently, and how rapidly do you think acceptance will take place?
What percentage of What?
Bitcoin trading globally, or Bitcoin held, cold storage.
Well, I mean, that's a difficult question to answer. I mean, I've seen numbers that suggest that 84% of Bitcoin was held by individuals, but it's untraceable because it's all dark. And I've said many times, I said, well, Bitcoin is either a legitimate institutional asset, it is digital capital, or it's not. But if it is, if it's not going to zero, it's going to a million, right? Because as soon as you acknowledge its legitimacy, then there's $500 trillion of capital floating out there. And when 1% of it flows into Bitcoin, it's got to go to a million and then 10 million. 1, 2, 3% is all it takes for this thing to blow past the market cap of gold. So the only thing that's been holding Bitcoin back is, you had this parade of cynics that said, well, it's tulip bulbs and it's a scam and it's a Ponzi scheme. And that held it back a bit. And then after that, we got to the skeptics who said, it's okay, fine. It's a crypto asset. It's pharmaceutical grade gold. You can't make any more of it. You can teleport it at the speed of light. Computers can use it. It's a million times better, faster, more useful than gold. And it doesn't have any of the defects of gold. Aha. Therefore, it's too good to be true. And the government's going to ban it. Like literally, I heard this so many times, right? I could name all of the talking heads that they wanted to show how smart they were. And their argument was, well, yeah, it's real, but it's too good to be true. The government's going to take it away from you because it's a threat to the dollar. And the only thing higher than investor is maximalist, where you say, Bitcoin is is economic empowerment to 8 billion people. It's important to the human race. It's going to lift the civilization.